Curious about how the ultra-rich minimize their tax liabilities? Welcome to Empowered Finance. Today we're exposing the tax avoidance secrets used by the wealthy to legally reduce their tax burden. Whether you're looking to optimize your own taxes or just curious about the financial maneuvers of the rich, this video is for you. Let's dive in. First, let's talk about offshore accounts. Wealthy individuals often use offshore bank accounts in countries with favorable tax laws like Switzerland, the Cayman Islands, and Singapore. These accounts can provide tax advantages and help diversify investments. While offshore accounts have a reputation for secrecy, they are legal as long as the income is reported. For example, many multinational corporations use offshore accounts to hold profits and defer taxes. This strategy is not just for companies, but can also benefit individuals who want to reduce their taxable income. Next, we have trusts and foundations. Trusts can be used to manage and protect assets while providing tax benefits. By placing assets into a trust, the wealthy can often avoid estate taxes and reduce income taxes. There are various types of trusts, including revocable, irrevocable, and charitable trusts. Foundations, on the other hand, allow the ultra-rich to donate assets to charitable causes, which can significantly lower their taxable income. Not only do foundations support philanthropy, but they also provide substantial tax deductions. Real estate investments are another powerful tax avoidance strategy. The ultra-rich invest in properties to take advantage of tax deductions on mortgage interest, property taxes, and depreciation. Real estate can also provide capital gains tax benefits when properties are held for long periods. Additionally, like-kind exchanges under IRS Section 1031 allow investors to defer capital gains taxes by reinvesting the proceeds from a sold property into a similar property. Business structures and income splitting are also key tactics. By incorporating businesses in low-tax jurisdictions, wealthy individuals can reduce their overall tax rate. They can also split income among family members to take advantage of lower tax brackets. For instance, setting up a family trust can help allocate income to children or other relatives in lower tax brackets, reducing the family's overall tax liability. Finally, tax-deferred retirement accounts like IRAs and 401(k)s offer significant tax advantages. Contributions to these accounts are often tax-deductible, and the investments grow tax-free until withdrawal. The ultra-rich maximize these benefits by making the highest possible contributions and using backdoor Roth IRAs. These accounts not only reduce current taxable income, but also help build wealth over time with tax-deferred growth. By understanding these strategies, you can see how the ultra-rich legally minimize their tax liabilities. Which strategy surprised you the most? Let us know in the comments. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe for more tips on managing your money and maximizing your wealth. See you next time on Empowered Finance.